Hello, everyone. Good morning. Hope everyone is doing all right. How are you guys doing today? Oh man, we got some stuff in the research inbox today that I'd like to go through, on top of the stuff for NQ and Aussie dollar and New Zealand dollar, because those things are moving. They hit our targets this morning. Ayo Isaac, feel free to hop into the group voice chat if you're a part of the trading group. As always, access to the trading group comes with access to all the indicators that I use in my streams and that I develop. And you can find links to all the resources and research that I'll be going through today in the Plan to Profit Discord. So, let's check out what's going on today. So this is NQ. And so far, so good. I'd say we're pretty close to either topping out on the day here, probably within another 40 or so points. Somewhere in this range right here. We'll probably end up topping out. I'm going to turn down that music just a tad for you guys. I don't want it to overpower my voice. I just want it in the background. There we go. So yeah, let's go ahead and lock in. If I could zoom in here, make it easier for you guys to see. Probably a move lower into the close. So today I'm expecting NQ to still close green, but not up here. Yeah, and today's 9/11. A lot of world leaders are stepping up, talking about it. I read all the DOD stuff about what they're doing for the memorial at Ground Zero. Yeah, you get some interesting stuff when you're subscribed to everyone's newsletter. So real quick, yeah, probably it pulls back. I'd say that there's actually some realistic chance that you just see a positive drift come in here, where it just keeps having these little small volatility moves that just inch up into the end of the day, because there's nothing going on for the rest of today. It's a pretty light morning, isn't it? All you guys who've actually checked the economic calendar, you guys can confirm that there's nothing going on. There's nothing going on today. Oh, but that's the lie of the economic calendar, right? Economic calendars will always say, oh, there's nothing going on today. Oh, there's maybe one important event going on today. And then and then you go ahead and you read the news and the world's on fire because some central banker said something that isn't on your calendar. That's the importance of having a squawk chat like Financial Juice. You know, not sponsored. At least not yet. Man, what a great service that is. And that's free. So, highly recommend Financial Juice. I actually got a little bit of information from Financial Juice. They have a newsletter called Deviations and Ranges. And if I could, let me real quick get the snapshot of it. I posted it in our macro to micro research channel. Here it is. So this is their report. And you should be able to see that. Now, it's pretty hard for you guys to see and maybe read this on your phones and whatnot, because it's such small text. It's an entire spreadsheet of the range, the expected forecasted range for how each economic event throughout the rest of this week is expected to print at. Except for the ECB interest rate. That's the only one that has any information missing here. So right off the bat, I'm just going to look at the US CPI number. So the month over month actually has a bit of downside surprise. So maybe we hit 0.6, maybe we hit 0.5. It's got a little bit of potential to come in a little bit lower, but what's the difference between 0.5 and 0.6 on the month-to-month CPI when the prior number was 0.2? That's still a reacceleration. The big thing that we don't want seeing is another reacceleration coming in for the month of September when we get that information in October. That's where a lot of the probabilities for pricing in a November rate hike by the FOMC are starting to be equivalent to around 50-50 odds of them actually hiking in November and not here in September. So they're going to wait and watch. The FOMC will wait and watch here during September. And if September's data also comes out hot come October, and then we can assume, okay, we don't want this trend to continue going through October. If it actually does print hot too, if inflation does print hot in October as well, yeah, you're gonna see a hike for sure. We will not be at terminal if that's the case. Yeah, it's important to have an understanding of future expectations. So what are the current set of expectations? What are we currently going through and experiencing? And how does a change in these outcomes, and then what degree, what magnitude of that change is going to help drive our decisions? And look at that. Nice little pull up. ARM is getting listed. And man, a lot of people have been trying to get shares of ARM. Big companies like Intel, I think. All the big partners that work with ARM, Apple, and I think NVIDIA, AMD, like there's all these people buying up as many shares as they can of ARM who are going to participate. And it'll be interesting who, by the end of day today, who has acquired the most amount of shares, and maybe who by the end of month, which partner of ARM has acquired the most amount of shares. I'd be surprised if it wasn't Apple. I don't know, maybe there's someone here in the chat who closely follows ARM and tech who can jump in and discuss that. But yeah, a little bit of a positive drift up or positive drift down. It's effectively more of a sideways-ish day here, I think, on the NQ. Let's check out New Zealand dollar. And you can actually see the short trade that I put on. And I went ahead and I put this out in the trade group when I took this trade. And yesterday, when I did the analysis, the weekly analysis in the trade group for the entire week ahead on a bunch of assets, I explicitly pointed this out. I said, hey, we could be topping out around here for the week, and I would love to see this kind of move higher. And man, I was not expecting us to go this high up on the day and technically on the week to a good spot for catching a short for probably the rest of the week here. And New Zealand isn't one of those countries, like, you know how we have ECB and we have all those macroeconomic events that I listed for this week ahead here? New Zealand isn't one of the countries that has a huge major economic event ahead. I think they have like a they have a survey or something coming out this week maybe. But New Zealand doesn't have much else going for it other than maybe some economic news that might be coming out of China if they get any more services-based stimulus. Because a lot of services also are food related. And a lot of New Zealand's export is milk. And it's explicitly because of the huge supply, the oversupply of milk that the New Zealanders have made since COVID. They've converted all that extra milk supply into dry powdered milk, and they've had to store it, and they've been storing it and storing it and storing it, and now they have these huge stores of dry powdered milk, and there's not enough demand for it. So it just keeps getting cheaper and cheaper and cheaper, up until the most recent auction that occurred in New Zealand. They finally had a little bit of a lift in the auction prices for their milk, but it's not necessarily sustained. They just got one print on it. So we're gonna need to see a sustained improvement in the demand for that, and also the inventory to actually go down. You know, in situations like that, I wouldn't be surprised to see them actually destroy some of their supply. You know, what's actually kind of interesting when I talk about the dairy industry, because you have to learn about this stuff when you're trading, because these are people's livelihoods, and this is how demand for a currency is made. Hey, Rod. Consider this, but it's just I'm thinking in my head because I have something in mind here. It would make sense to me that in New Zealand that they would destroy some of their dairy supply because they've oversupplied. So in order to bring back the demand and bring back prices that are reasonable, so that then the farmers can live, to destroy some of that supply. It'd be better to maybe get a little bit more money for what you have left than trying to sell a huge inventory that there's no demand for. But guess what they're doing so I'm surprised New Zealand isn't destroying dairy, that the extra dairy supply that they have, in order to help their dairy farmers stay afloat and stay profitable. But in the meantime, there are these videos I'm seeing of people in Canada being forced by the government to destroy thousands and thousands of liters of milk. There was a big video that blew up like a week and a half ago of this dairy farmer who said, just literally showing all these gallons and gallons of milk go into a runoff. And I'm like, man, some of the things people in the world are gonna do. Anyways, with that little rant out of the way, I think I got a good short here on the week for New Zealand. Thank you, Range Probabilities, for pointing out this is a likely top for the day. And then if I go to a weekly time frame using a 12-hour chart, you can see, oh, we got a nice peak in our distribution right here. And I pointed this out last week. I think I did this on Friday stream live in front of everybody. If you were here, go ahead and say you were here and you saw me do this, right? It's good to have witnesses. But if you saw me do this, say you saw me do this. But I didn't just do this in the live stream last Friday. I also did this in the private trading group stream on Saturday. And I didn't cover too many assets on Saturday, but I went over some of the risks I was highlighting there for the whole week and the whole kind of latter half of the month ahead, because there are some major catalysts coming out. And if you haven't been following me recently, you wouldn't know what they are. But if you joined the Discord and just read the research roundups, which are literal bullet point explanations of all the things that I find throughout the day that I think are helpful for doing trade research, yeah, you'd be totally caught up and have exactly the same information that I do when I'm looking at these charts and trying to figure out what I think is going to happen next. I do way more legitimate trade research than probably 99% of people out there on YouTube. And there's a handful of people who do this amount of trade research, and they do a really good job of explaining it too. And those guys I commend, and I watch them myself. But man, the number of gurus out there. The number of damn gurus, you know. Anyways. Enough with this, because I think I'm pretty much done for the week now on this pair. Otherwise, I might get another shot tomorrow. That'd be nice. Let's go for Aussie dollar. I mean, there is a risk that during the CPI release, that if the CPI release, you know, when it comes out reaccelerated, that makes the dollar weaker, right? Hello, Spirit. And I agree with that explanation. In fact, real quick, let me go ahead and bring up some of the analysis that I've been reading here. I mean, look at this. This is the front page of Bloomberg. This is the first thing you see when you get on the Bloomberg this morning. US dollar starts weak under pressure. Guys, this was expected. I was already talking about this like Wednesday, Thursday last week on these streams. Like, anyone who is actually trading and doing any actual trade research saw this coming from a mile ahead, because all the week ahead outlooks were talking about, oh, it looks like US CPI might be coming in hotter than expected. And we're still not expecting the FOMC on September 20th to do any sort of hike. Well, if the FOMC is not going to do any sort of hike, and inflation continues to accelerate in the United States, then maybe the United States dollar would get weak from there. That's incredibly rational logic, incredibly rational, and incredibly straightforward expectations that a lot of people have. To rethink that New Zealand dollar one? Well, yeah. I mean, when it comes down to the CPI, there is definitely a risk there. But I can also be taking this risk just for the day. I mean, if I go ahead and I bring that one back up here real quick for Joel here. Sure, if I miss out this short here on the week, what's the probability that today the close for the day is below my entry? What is the probability that the close for the day is below my entry? And note, CPI comes in 2 days from now. CPI comes in over here on the 13th. Nothing's happening today other than this snap that we got. So, real quick, what is the probability that my trade closes the day in profit? 86.86% of the time. Yeah. I don't know about you, but that's a considerably high. That's considerably high. So you're right, Joel. I may need to rethink it once we get closer to the risk event. But between right here and then, I have some time to make my decision and to adjust the risks if I need to. So no, you're right. Definitely, there's a point in a time I'll probably need to rethink it, but probably not right now. And that was a nice actual high probability setup, because I can measurably say, hey, this is where a lot of highs come in on the day and on the week. And then show you, okay, this is an 86% of the time. We end the day. This trade ends the day in profit. So I feel pretty comfortable. And, you know, risking only 20 basis points per trade, I could lose 2, 3, 4 times in a row, and I've shown that I've lost on these streams 2, 3, 4, 5 times more sometimes. So maybe in the future I'll be able to demonstrate an 8-trade losing streak or something and show how that doesn't take me out of the game. You have to be set up in such a way that you could lose a lot of trades and not get killed by it, not get ruined by it, is the technical term. So I like to risk 20 basis points per trade. And don't get me wrong, if I see really good opportunities, I, at my own discretion, will take on more risk if I want to. But generally speaking, those moments are kind of few and far between. And I want to have at least some measure of probability behind that when I'm making those decisions. So I never want to go all in because there's always some probability that I lose. There's always some probability that I lose. So I'm always going to be taking that into account whenever I'm putting on these trades. Yeah. A weighted coin is a good way to put it, for sure. How's Aussie yen looking? Let's see. Oh man, yeah, this thing probably bottomed out for the day. Check that out. Yeah, that is crazy. That, I feel so sorry. A lot of people probably got wicked on that one. How did that turn out for the week? Ooh, boy. Yeah, a lot of people probably wanted this to come just a bit lower, closer to just above in this lower half of the 93 handle. And the things, yeah. Look, yen is in a weird spot. I'm going to bring up the research tab one more time. Because look at this headline right here. Yen jumps as traders mull hawkish statements or comments from BOJ's Ueda. So there was a post by Brent Donnelly. He wrote this book here called Alpha Trader, and this is actually a signed copy from him. I always flash that when I mention his stuff. Give the guy credit. It's a good book if you're brand new to trading, to read and check out. A lot of valuable information in there if you're just getting started. And also all of his articles, the 50 and 50 articles were great. I'm glad I was able to read those from 1 to 50 as he started that series. Good guy to read. Anyways, he has a newsletter where every Friday he talks about what's on his mind in the markets. And one of the things that he was mentioning in his latest newsletter was that the bank of, I think if someone at the Ministry of Finance said the word urgent or urgency when discussing the FX markets, that they are watching FX markets with urgency. And so real quick, what Brent did is he went back, and he has a history of trading yen, by the way, for like he's been trading yen pairs and FX for a long time. Oh yeah. Oh, good on you, Spirit, reading through that. Yeah. I'm glad you're looking through it for sure. I have all sorts of resources, my man. I can really speed people through all the bullshit and all the non-bullshit when it comes down to all the guys who are real, all the guys who are actually, I mean, compare the research that I'm bringing up here to what you'll find in most analyses. I mean, look at this. Senior currency strategist for Westpac. We're going to be reading this in a bit in order to get a better understanding of our expectations for the Australian dollar here in a bit. But specifically for the yen, I mentioned this in my weekly outlook in the trading group. This is a time to be very, very careful because at any point in time now, Bank of Japan intervention could come at a moment's notice. This is where having access and having notifications from a service like Financial Juice can really come in handy, because those events won't get you notified through some economic calendar, and maybe Bloomberg or Reuters or Nikkei will send you an email in the morning or at night that, oh, the Bank of Japan did this move. No, you want to know when the Bank of Japan moves as quickly as possible. And that's where a squawk comes in handy, like Financial Juice. And actually, as a real quick thing, I'm going to pull it up and see if there's any breaking news. Oh, Qualcomm announces pact with Apple for chip supply. Oh, there you go. There you go. Actually, let's check out Apple on that news. Let's see here. Hide that. Transition that. Looks like Apple is gapping up on the pre-market. Apple is currently surviving this dip. Yeah, and you can see there was a losing trade there. But it was just bad timing. Yeah. Simple as. I mean, if I was proactively trading equities instead of FX, I probably would have taken a couple of shots on this, but I'm not going to make any excuses, right? So let's see here. What do you guys got to say? We moved to Japan. Yeah, my man. Let me know what you guys are interested in hearing more about as I go through it all. Because it's interesting seeing maybe what you guys want to learn more about. Now, again, there's just risks. If I could, you know what? I think the best way to illustrate my point is just to bring up what Brent created. It was a chart of points in time when the Bank of Japan intervened in FX markets. After there was a speech that came out, or a bit of a notification, let's say. Let's see, can I find it? No, it's not in my central bank's research channel. Again, these research channels are free in the Plan to Profit Discord. Absolutely free to come and check them out. It doesn't seem to be in that. Yeah, I've posted so much stuff now since then. Yep. Oh, actually, no, it's in my FX channel. Silly me. All right, so here's the 50 in... Here's not the 50 and 50. This is the Friday speed room that I'm talking about. This is Brent's stuff. And this is the chart that I am... So you guys can see that, right? Yeah, you can. So this is kind of a crazy chart, but every single one of these red lines is pointing to when the Japanese Ministry of Finance, or someone in the Japanese government, or someone from the Bank of Japan comes out and says the word urgency. We are watching the FX markets with a sense of urgency. It is urgent we pay attention to the FX markets. And these are, look, 1, 2, 3, all these are instances when someone in a position of power from the Bank of Japan used the key phrase urgency, and then there was some sort of yen intervention in the FX markets occurring sometime later down the road. And that would potentially make the yen stronger. Now, in this area over here, remember when yen went to 150 over here last year? Oh man, that was just nutty. That was just nutty. The thing would not give. But they just kept weakening and weakening and weakening the yen. Oh man. And then something's got to give, and they gave. They sure did. So with that out of the way. Oh yeah, and then there's this stuff going on. So how about we move on now? Oh yeah, joint intervention is needed from Asian central banks to cap US dollar strength. Oh boy, these guys are going to be in for a storm, because that dollar milkshake theory, that dollar smile theory is really going to be coming into play. Sell the Aussie yen now? No, I don't think that's going to be the smartest move. Because if what we're doing is looking at when, let's say, yen intervention is going to come in, the time to make a discretionary assessment about when to get in and get out is based off of what kind of intervention the Ministry of Finance does and how big that intervention is. And to learn what's a big intervention and to be readily available for that, you know, I actually would read up on the MUFG outlooks that I've posted. Yeah, you know, something can be seasonally bearish, but the assumption behind seasonal trading is that an asset is behaving seasonally. So you have to make the argument that the most recent price action has been behaving seasonally, and that it is reasonable to assume an asset's behavior to continue behaving seasonally. So if there's no assumption that a seasonal trend might be particularly dominant in the period going forward, assuming that seasonal expectations will hold might not be the best thing in the world. Unless you're talking about something like grain. Unless you're talking about something like food, you know. USD CAD on the 3 hour. That might be interesting. Oh boy, yeah, this thing's going down. Down, down, down. Yeah, man. I am on this. Yeah, man. I am expecting down, down, down. I'm actually going to set an alert there because I might want to take a shot at that spot. Isn't that kind of cool? It shows you, hey, this is where a lot of your lows for the week could show up. I have a feeling that on the week it's going to go down. And now on the day, yeah, on the day it looks like it could do a little bit of a bounce thing. So maybe the play, unless the kibosh just comes in and it goes, right? If it just plummets today, and that wouldn't be my expectation, right? Based off looking at these odds. My expectation would be more of like an up and then maybe a down again. Maybe this ends up occurring going into CPI, so maybe you get an even larger up, and then going into CPI, it comes like way, way down. There's all sorts of ways you can fiddle around with this. But yeah, going into end of day, there might be some good odds here actually on the long side. So this one right here is for the week. That's based off the weekly range probabilities. And this one here is based off the daily range probabilities. So let's go ahead and check out our closing odds here. Oh yeah. Yeah, it's something like 80% of the time you end the week somewhere above the current price. Or rather, not the week, the day. I misspoke. These are range probabilities for the day. Yeah. Oh, move the outlook. Oh, I'm sorry. Thank you for letting me know. Thank you, Isaac. I appreciate that. Okay, sorry about that. So real quick, this red one is for the week. This one is on the day. We're looking at 8 time. The close for the day comes in above this line here. Yeah, I'm sorry about that. It happens sometimes. I'm sorry. It happens sometimes. But that's why I got you guys here in the chat saying, hey, Joe, stop that. But again, looking at this chart, I'm still like, hey, you could see just a continued kibosh move lower, a zip down into this spot here. Call it 355. This area here. I should probably draw a range, shouldn't I? Where's my little box drawing tool? There we go. Something like that. Set that to green. There we go. And then I got my little alert set up for when we hop into that spot. And for you guys who like pivots, that'd be roughly the S1.5 pivot. Or I think that's M1 if you're using the legacy style of pivot labeling. And as far as seasonality goes, we can also bring up this old girl. Let's see, anything? Oh, wow. Yeah. It also points out that going past this S1.5's in the cards, or bottoming out right here. I'd have an expectation that we go down to around here. So this is based off seasonal data. This thing with these percentages, this is based off seasonal data with pivot points. And that is pivot probabilities. You get pivot probabilities and range probabilities together when you're in the trade group. No, I did close the tab, Joel. I did. Again, sorry about that. But you know what? It happens sometimes. Sometimes I just get... Now, as far as the Aussie side of things, I want to pull this up. You guys can read that, right? So let's see here. Let's read this for a second. Still, China's August activity data due Friday is not expected to inspire optimism over China's economy. So we got China data coming out this Friday. The RBA has generally been less hawkish than, I think, other major central banks. This says then over. I think that's a misspelling. During post-pandemic tightening cycle. This remains the case following RBA's September meeting. Good. Some further tightening of monetary policy may be required, but also introduced new notes of caution that China's economy may slow down. I've started to finally see... he's behind on the live. Oh, how far am I behind? Yeah, maybe. No, what I was saying here is I've finally started to see some forecasts of other research firms like Wells Fargo start to come out and say, hey, we're not actually expecting China to hit 5% year-over-year GDP for 2023. We're not expecting to hit 5% GDP. And that's like a psychological number on a macro scale for China that they're able to cross through 5% GDP here in 2023. And now more and more forecasts with the most latest data are starting to downgrade the expectations of reaching 5% GDP for the year. But anyone who knew anything about what's going on with China knew it probably wasn't going to happen. That they were already slowing down, and that they've been slowing down, and well, we're gonna see how hard China hits the floor. Hopefully not too hard. Hopefully not too hard. Let's see here. Australia's second quarter GDP data didn't have a noticeable impact. That's great. Surprising dip in employment in July. A rebound is expected. So unemployment is expected to edge down in Australia. That's good. And employment is expected to go higher. Alrighty. let's see here. So they're also focused on US August CPI. Oh, and here's something about the Aussie Euro cross. Oh, yeah. Everyone is confused about the ECB's rate decision this week. Everyone is confused about it. However, depending on who you talk to, the odds are 50-50 of rate or of a rate hike or pause, or 40-60 of a rate hike or pause. It seems like most people would kind of want to lean on a pause occurring, but it really, really, really is a coin flip. And I have actually something out of Danske Bank here. They have a particular view that I agree with. This is their daily brief. This is their daily FX brief. And let's see here. If I search for hike, yeah, there you go. Regarding the ECB meeting, we expect a 25 basis point rate hike. This is one of the few institutions that are anticipating a rate hike out of the ECB. Given the market is pricing around 8 to 9 points, a rate hike will likely result in a knee-jerk reaction higher for euro-dollar, which could give decent selling opportunities in the euro-dollar exchange rate. We maintain our strategic case for a lower euro-dollar, as the US economy seems relatively stronger and better at coping with the consequences of monetary policy tightening. That seems pretty straightforward to me there. And then that's the week ahead stuff. Oh yeah, there was some good analysis. Read this in the Outlooks channel. I highly encourage reading this article. Global PMIs shows recovery fading further in August as developed world output falls. A lot of people thought that the United States was doing extraordinarily well because the ISM PMI numbers came out last week really, really well, right? Those ISM PMIs, you know how those surprised to the upside? Well, I'm sorry to say, but the ISM PMIs are not as good at forecasting GDP as the S&P Global PMIs are. And the S&P Global PMIs showed that the US was actually continuing to decline. And typically when divergences occur in the ISM and the S&P Global number, I'm going to pick the S&P Global PMI over the ISM number. And the reason is because of how those two surveys are constructed. The ISM PMI number is constructed effectively based off survey questions like, how is your company doing overall? Whereas S&P Global will say, how is your company doing just within the United States? So in the S&P Global survey, you're only allowed to talk about and discuss the performance of your company if it's an international organization, how it performed just in the United States or just in Europe. And then you get a different PMI score for the US and for Europe. Even though it might be the same country, the same company, it's operating in different countries and you're trying to figure out the growth in each individual country, not in a single company. Whereas the ISM PMIs, they'll just ask the company, how are you doing? And because the company is based in the United States, they'll say we're doing great, and then they'll attribute all of that company's performance to the United States. And that's how I currently understand the difference between those, how those two surveys are generally conducted. Also, on a more critical point, outside of just how the survey is conducted, S&P Global apparently includes more small and medium-sized businesses and a much wider range of businesses across all their PMI surveys compared to the ISM, where the ISM just includes a lot of blue chips and some high and medium-sized companies. So I would really stick with the S&P Global PMIs, and I thought that the ISM was actually maybe an event to fade. But yeah, that's my little rant. That's my little rant on S&P Global and the ISM. What happens if a pause occurs? Are you talking about, Ari, if a pause occurs in Europe? Right, in the ECB? If a pause occurs there, let me go ahead, bring up Eurodollar and hide the research for a moment. Then I'm expecting us to go to the upper half of this 107 range. Potentially on the month, we're probably at a low for the month, in all seriousness. Either this could be the low for the month, or we could be going down like another 150 pips on whatever pullback happens. And because I've already said I'm in agreement with the analysis of Danske Bank's view on if a rate hike occurs, that might be something to fade. That's why I have this drawing here, this up and then this down. And I'm looking at these weekly range probabilities to figure out, okay, if I do get a higher end move off of, let's say, after that US CPI reading comes in hot as expected, and on the following day, on the 14th, the ECB meeting comes out with a hike, then maybe around here in the upper half, just below the 108 spot, I may want to take a shot on the short side if that's my particular bias. You joined late. Hey, Terry. Are we going to be long on the dollar from Wednesday? Maybe. Maybe. It really depends, because we know that the US CPI number is going to be coming in hot, and that could absolutely make the dollar weaker. The only reason why I say it could make the dollar weaker is because, for whatever reason, markets can behave really weird. And let me give an example of what I think would be a weird behavior. If the US CPI comes out hot, but because it comes out hot, the FOMC's, well, more specifically, the CME Fed Watch Tools probability of getting another rate hike for this September, the one on the 20th of September, the rate decision by the FOMC, if the probability of a rate hike for that event suddenly were to go up like 5 or 10 or 20, 30%, some amount, that might scare some people, quite frankly. Like, oh, the US CPI number just went up. We knew it was going to go up ahead of time. But now that the number has actually realized with a higher print, we could now see like a 20-80 split between a no hike, a pause from the Fed, and a hike scenario, an 80-20 split on that. And that would be a weird thing, because right now I think the probability is split like 90 or 95% for a pause to 10 or 5% for a hike. Probably closer to like that 5% mark. And note that the Fed's not usually one to surprise. Yeah, down 120 points from the start of the week, yeah. Sometimes the volatility from the very start of the week is gonna hit hard and fast. The good part is that when you trade this style and you do good research and you're taking trades at high probability spots, you know, over time, okay, so long I know what I'm doing, I'm gonna be all right. Let's see here. I said I'd cover something. Let me figure out what it was. Oh, yeah, some potential downside targets on the Aussie and the New Zealand. Oh, yeah, that's right. Yeah, you guys can hop into the Discord when the stream's done. Might be a stupid question, but what would have the biggest impact? Pound or the rate hike on the US dollar, in my opinion? I don't think pound's gonna have any major decision on the movement of the US dollar. It's mostly gonna be the ECB rate hike decision and US CPI. And I see those as opportunities to fade any dollar weakness. I see those as opportunities to fade. And I mean, a lot of the analysis and the research that I've read, that seems to be the expectation, to fade any dollar weakness from here on. Yeah, I don't think that the pound's gonna be doing too much, yeah. Well, we're getting the up move as I expected here. But man, it is still holding strong on the day. Oh no, I might lose 20... Well, I already lost 20 basis points here earlier on that day. Oh no, I might lose another 20 basis points. Oh no. God, imagine if I was risking 1% per trade. If I lost these 2 trades in a row, I'd be down 2%. But yeah. I still see the downside targets coming in here. What's the wow. It's like a 6.5% probability that the low is in for the week. Right off the bat. So pretty low odd that the low is in right here, right now on the week. Let's use pivot probabilities. So pivot probabilities actually comes in and says, it's probably a little bit closer to like 60%, 58%. So yeah, a lot of your lows seasonally occur in this area right here. But it might have to come later in the week. It might have to come in later in the week. But this is definitely a spot to be cautious. Because the last thing you want is one more rip, roar, and a tear up to this spot here where that'd be... I'd like to get a spot on the short side there. That looks good. Man, that just looks so good. Yeah, and check out that trade from last week. I'm just gonna keep doing the exact same thing every week, and you'll see, oh, Joe, why are you shorting up into these highs? Don't you see that's such a strong candle? No, I don't pay attention to the candlestick patterns, my dude. If there's a decent probability of something happening, I'd like to know the probability of it occurring. I mean, look at that. Oh no, another losing trade. Oh no, and then look at all that. Good stuff. And then still here. There's still room to the upside on this, if possible. I wouldn't mind seeing any more upside on this one. Because I have the exact same expectations. In fact, I probably have worse expectations for New Zealand and their economy than Australia. At least Australia has iron and aluminum and coal. I mean, they export so much stuff. I mean, Australia's getting hit on the oil side of things, but man, Man, New Zealand. New Zealand really needs some help. Let's see here. What else is there? In your opinion, would you go short Tuesday or when? Well, that might be a little too soon. Because the news that we're talking about here, Terry, doesn't occur until Tuesday and Thursday. So, yeah. Oh no, definitely, Lewis. I'm definitely more bullish on the dollar, for sure. You should read up on what the dollar smile theory if you haven't already. Because that seems to be one of the primary driving factors behind why the dollar has been getting stronger and has future expectations of continuing to get stronger from here. So, yeah, no, pound might be done for the week. That might be the topic for the week. And I mean, you can see all my forecasts here. You can check that out. I had like, oh, if we went all the way up there, and you can catch that long and catch that long, and I caught that long, and I got that move. Yeah, I don't focus terribly much on trading pound dollar. And also, by the way, Lewis, you can find the link. There's two particular articles that might help understand like where at least I'm coming from on the dollar bull side, right? That would be figuring out what the dollar smile theory is and what a growth inflation matrix is. And I have a pinned message, I think, in the Forex chat or something. Let's see. Yeah, there's the dollar smile theory explanation pinned in the Forex channel. Let me see. Maybe it's in the general chat. Yeah, it's in the general chat. There are two particularly good articles that break down the dollar smile theory and the growth inflation matrix. And those are two concepts that, frankly, make interpreting macroeconomic regimes and dollar strength and weak regimes a lot easier to comprehend and just intuitively understand. A lot less guessing involved when you have those two frameworks to work with. And also understand what type of people trade and do their analysis using those frameworks. The growth inflation matrix is something Ray Dalio's been using for 40 years now. And the dollar smile theory has been around at least for just as long, I think. Yeah, absolutely. Definitely go check them out. It's in the general chat. There's a pinned comment. I'll probably have to edit that message because right now it just says, nah, man, here you go. And I'm pinging Bukowski in it. And it says dollar smile growth inflation matrix in there. So, you know, I try and make it as easy as possible to get up to speed with at least doing the level of analysis that I'm doing as quickly as possible. I share all the resources to everything that I'm doing. I share the resources to all the trade research that I do, to all the outlooks that I read, to all the educational materials, and then I try and condense it and say, well, if you want to get as practical as quickly as possible, then maybe consider reading those two articles. And then let's have conversations from there, because the context of what is actually important to know right now or for the week or the month ahead could change depending on what's actually useful, you know? Like, oh man, there's just so many examples that come to mind. My brain just, it's like, dude, Jackson Hole was a whole thing. All the central bank meetings are another thing. It's weird when markets have an expectation for a major economic event, yet your plan going into the economic event is, even if it's strong, to fade it and trade in the opposite direction of the immediate reaction to it. And then it turns out that is like the bottom or the top for an entire week, or potentially for a month, if the thesis you have is especially strong. Because your understanding of the world, of what's going on in reality, is more accurate than some pundit on Bloomberg just reporting and doing analysis on what some other guy is saying. You know, little clips of what a bunch of smart people are saying right here and right now doesn't necessarily tell you about what they're actually expecting is going to happen by the end of the week or going into the following week. They might just be talking about their expectations for a single event or for one single day, or literally just be talking about the current economic conditions, when really the thing that actually makes you a good trader is figuring out future expectations relative to where we are right now. Your ability to figure out how things are changing is the most important skill when you're trying to get good at trading. Yeah, boom. Man, oh man, this is definitely a stream on the longer side. I try to keep these streams like to 30 minutes to some odd, but I see you guys have been watching all the way through here. I really appreciate it. If you're new, like, subscribe, come hang out in the Discord with me. And if you're interested in any of these resources or any of these indicators, come check out the Plan the Profit Discord. And with that, I'm going to say thank you guys very much for watching. This definitely was a cool one. Hopefully you guys enjoyed the background music. But with that all said, I think now it's time to end the stream. I want to say thank you guys again for watching. This is a very, very productive stream. I'll see you guys in a bit. Bum, bum, bum. Bum, bum, bum.
Yo.